All right. And we're live. How's it going, Roy?
Good. Better than the markets, but there's more to life than the markets, although that's what we're here to talk about. How are you, Tevis?
Better than the markets. Another red day today, eh?
Kind of. I think the NASDAQ finished just about flat. The S&P 500 wasn't too far beyond it. Pretty nice recovery, especially when you're looking at the overnight markets. NASDAQ
Yeah.
was down at one point 15% from the peak. Of course, once a major ticker like the NASDAQ or really the S&P 500 is where most of the things are measured, is down 10%, that's considered a correction. 20%, and you know this, Tevis, I'm explaining it to the audience, is a bear market. So do you think we're going to get to 20% in the NASDAQ and or S&P 500?
No.
Why not?
I don't know. We've fallen quite a bit. I think the main catalyst that is leading to the drop is fast approaching on this Wednesday.
April 2nd. That's right.
I think that's going to be a catalyst to turn it around. I mean, that's what the market is like. So I would say, like, flip your narrative. If this was a super positive, bullish catalyst that everybody was actually, working towards, and the best news was going to come out on Wednesday, what would happen? It would likely be a sell the news event, right? This is similar to how I see this. I mean, of course, glass half full. I wouldn't really be in the markets if I wasn't generally glass half full type of person. But yeah, man, I think that the doom and gloom is all as a result of these tariffs, and these tariffs have been communicated for a month now, and we've been dropping as a result of them. Now, of course, it can get worse. They can be more aggressive. They can be more unexpected in addition to what was already promised, but a good chunk of it is promised, and it will come on Wednesday as promised. And, I think the market can just rest assured, because that is no longer going to be a point of uncertainty. And we can just say, okay, cool. Like, it happened. Let's readjust, price it in, and keep going with our lives.
Yeah, I think that's really astute what you had mentioned, Tevis. We're basically to remove the bias, which, emotions are like, oh, the stocks are falling, red. It feels like it's going to fall forever, and then we're going to hit like zero and everything. We obviously know that's not going to happen. We don't trade. We don't make decisions based on emotion. And so taking the flip side, saying, well, if it was a massive positive catalyst, we had Green Day after Green Day, everyone and their mother would be expecting a sell the news event. Now, the market can sometimes surprise us, but you're certainly not the only one that's predicting some sort of bottoming relatively soon. Tom Lee, of course, thought perhaps it would happen before April 2nd. We'll see. But it's tough. Okay, so April 2nd, we'll start there. And by the way, guys, as always with Bootleg Weekly, when we get to the last 30 minutes or so, we will answer your questions to the best of our ability. Some of those answers, maybe we don't know, or we don't care, or something along those lines. But we got a lot of things to talk about. So we're going to start with tariffs, with macro. We're going to want to talk some Nvidia, Tevis. You also had an interesting post with Coastal Community Bank, which, if you're not familiar, just go with us on that. It's intriguing. It's at least worth looking at just briefly. And we'll get to maybe a couple other topics as well.
The XAI news is something that I want to talk about as well.
Yes, absolutely. So, all right. So let's start with the macro stuff. So April 2nd, of course, is
Liberation Day.
I was like, it's called Liberation Day, yeah, but that's maybe euphemistically. So it's like D-Day, Destruction Day, Armageddon. Like, it just depends on where you're at. So a couple of items here. So one is, let's see if this will blow up.
While Roy brings that up, yes, Jesse, Bootleg is at 8 p.m. every Monday. And we might change that in the future, but ideally we won't. So 8 p.m. on mine and on Roy's channels every Monday, you have the Bootleg Weekly Show, starting off your week right. Do you want to throw this up?
Yeah, just to give credit, Jim Bianco. So his graph right there, Bianco Research. I thought this was pretty good. It's a little bit light colored, so I apologize. But basically, this chart right here is showing with some verbiage here. You can look him up on Twitter. The average rate on all imports for tariffs, and so this is historical, going back to 1830, which isn't like really useful. It's kind of useful though to see. In the past, certainly it's been a lot higher. But I think what's most alarming is the rate of incline. If this happened over 4 years of Trump's term, I don't think the markets would be freaking out.
Yeah.
If it had happened in a very measured way and a lot of lead up to it, I think that would be one thing. But this is one where, we're getting down to the wire here. In 2 days is supposed to be the day where these tariffs take full effect. And we don't know really how much, if any, they'll be applied, or if it's also just the beginning, because there's some hints that there's going to be even more tariffs coming on auto, on pharmaceuticals as well, which we talked about with HIMSS last week. So it's a big question mark right now. So it looks relatively low at 8.4, 8.40%. But relative to where we've been really after World War II, it's quite high, and it may just be the beginning. Now, one more thing here, and do you think we can show this clip that Amit posted?
Yeah, sure.
All right. I thought it was useful just to kind of understand why the market is acting quite uncertain, and I'm not sure that it's all priced in with April 2nd. Let me know if you can't hear this, Tevis.
Can't hear it.
Man.
You
want to pull it up? I always struggle with that, so I don't know what's with me.
Pull it down and then throw it back up.
Just the tab or the whole window?
The tab, I believe. Try the tab.
And then I see tab and right there. Okay, got it. Let's take 2.
All right.
Which is maybe tomorrow night or probably Wednesday, you're going to see. And they're reciprocal. So whatever they charge us, we charge them, but we're being nicer than they were. We have a lot of countries, friend and foe. I always say friend and foe, but the friend in many cases is worse than the foe. They took advantage of us. And we are going to be very nice by comparison to what they were. The numbers will be lower than what they've been charging us. And in some cases, maybe substantially lower, but we sort of have a world obligation perhaps. But we're going to be very nice. Relatively speaking, we're going to be very kind. Somebody said that about me the other day. He said, who doesn't know me very well, they said, you're such a kind person. And I said, say that again. They said, you're a kind person. I said, I've never heard that before. It was a weird statement. I was kind. I've heard of words that.
All right. So that's the thing is with Trump and these policies is you don't know. It's like, okay, if that was the only context you've had, you've never heard of Donald Trump, and you're like, oh, so it won't be that bad then. That's not what he's saying at all. So we don't know. We may not know until April 2nd. And the toughest thing for me, Tevis, is not only may we not know until April 2nd, there may be an extension on this, especially with some certain countries. And so we still may not have certainty, even if it's bad news. I think having bad news and being able to price that in and know that it's going to stick, we don't know if that bad news is going to last either. So it's just the market is in a state of uncertainty. It doesn't perform well in times like this. But at some point, a lot of negativity gets overpriced in. So where do you land on all this?
I mean, I don't know, man. Like, I don't really hyperfixate on it. As long as you're buying good companies, then it doesn't really matter in the long term. You're going to get a lot of buying opportunities in the short term, though. So I'm not really sad about it. But again, I think that, well, I don't know, actually, right? Because one side of me would take the stance that the tariffs are going to be short-lived, and the moment that they tighten those screws, that the U.S. is going to be hurting and every other country is going to be hurting as a result, and every party involved around the table would be incentivized to take them off. And then the other side of me is like, did you hear the guy that was just speaking? Like, it's the stance around, and like he is a salesperson through and through. How he frames certain things, how he phrases certain things. It's just he has created a narrative around these tariffs that they're going to be the best thing to happen to the United States since sliced bread. And I think a lot of people know that that's not the case. And he's said like, oh yeah, there's going to be a little bit of chop, but other than that, this is going to be the best thing that happens to. And so it's like, I don't know how I can reconcile those two stances. Where a side of me is like, look, the logical, rational half of my thought process is saying, yeah, it's not really something to be worried about because they're going to be short lived. And then the other side of me is like, I don't know. Like, I don't know if we're dealing with entirely rational parties here because there's so much baked into the promise of these tariffs in terms of like worldviews baked into the promise of these tariffs, where he's like saying like, hey, we used to have tariffs. And I mean, you put up the chart, Roy, like those numbers were pretty staggering. I hadn't seen those before. In the 1800s, you had 40%, 50% tariffs on average. It was a very different country in a very different time in the globe. Like now the world has become smaller with international trade and globalization, and you have all these countries trading with one another. And like, I don't know that you can really apply a cookie cutter solution like that, like we had 200 years ago to the time today. And I don't know if that's going to be a lesson that we collectively, the world, learns the hard way or not.
Yeah, and I think we can pretty much throw out all the data before World War One. United States was just not on the same level as far as a superpower. It was important in the global economy, but not to the scale that it was really after World War One. But I think the Smoot-Hawley tariffs are perhaps the closest correlation that we have as far as like a rapid increase of tariffs. And those were in the 1930s. Those were two senators, don't remember which party, probably Democrat, honestly, just because of the era. But they proposed some very aggressive tariffs. And as a result, those were signed into law. And at the time, everybody's like, hey, this is going to be great. It's going to bring in additional revenue for the United States. We were in the middle of the Great Depression at that point. And they said, hey, this could cure what ails us. And it's going to, other countries will pay for this. It'll help, the government revenue and all that stuff, all these benefits that we had rolled out. And it will also secure and save U.S. manufacturing. Now, it did the opposite. And that's one of the nice things about looking at history like that is I don't think anybody is like, oh, you're just being political when it comes to something that's like almost 100 years ago. It's not. But yeah, the reality is they were deeply unpopular across the world, which you might say, oh, no big deal, but also in the United States. And they're almost universally seen as elongating the Great Depression, as actually doing the opposite goal for manufacturing, actually hurt U.S. manufacturing. It kicked off a global trade war, and it really led to a lot of strain on international relations. It was I think the term at the time was coined "beggar thy neighbor." So that you were trying to
not this neighbor.
What's that?
Not this neighbor.
Yeah, not Canada, of course. We were good buddies for back then, just like now, right? But no, it ended up being a disaster. And almost every single time, I think there are times to use tariffs selectively, but man, I'm like looking at this and I'm like, okay, is he not understanding history? He goes back to McKinley quite a bit, which is good on one hand and actually very worrying on the other hand. But yeah, regardless, it's like I don't know if he's really not understanding history. How much is a negotiation tactic? How much is going to stick? And the market's looking like this. And the hard thing is, it's not just the markets, but it's companies. Long term, if they're like, hey, we're going to roll out some CapEx expenditures, or we're going to have a new product line in Canada, you can't right now. You just can't. You don't have any certainty as far as what that is going to look like. And so you just wait. And it causes a real impact on businesses. And so my concern is that my biggest concern is not that the tariffs hit. That stinks. It's terrible. It's short-sighted, even if it doesn't last for long. But what's going to be worse, I think, is if we have continued uncertainty, that things get rolled out more, or that they hit. I guess probably the worst is that they hit, and he's like, all right, now let's do some more. Man, that would nuke the market. So I did not think that we'd see a bear market really for years, and this may be that exception that causes it.
Yeah. I don't disagree, and it's funny that you said like I'm not worried about tariffs. Like like this is what I'm saying by it being priced in, because they've been talking about it and it's been on all the news cycles, and I almost feel like the last couple of news cycles it just wasn't as talked about. Like I remember at the end of February where all of these tariffs were being discussed, like it was so much more heated and charged when Canada was saying counter tariffs, and like how politically charged it was with people here not buying American and taking stuff off the shelves. And it's like, okay, like the state hasn't changed. Like the status is still, reciprocal tariffs, but now it's just gotten stale in the news cycle. And so that's part of the reason why I'm saying that the market's going to rebound off of this, because like there's going to be other things for the market to be uncertain about or excited about. And this has been priced in over the course of the last month. Now, in terms of the actual economy, we'll see how this impacts, but we won't see that for another little while. It's not going to be an immediate effect.
Yeah. I hope you're right. I'm not optimistic, but I hope you're right. Now, best case scenario, and Shayna's 987 alluded to this, that, reciprocal tariffs, if the goal is negotiation to really bring down the amount of tariffs that are on the United States and actually further free trade, that's an amazing thing if that works out for the United States, and I think globally as well. I'm just not optimistic.
And there were, I mean, to his point, there were a few countries that did lower their tariffs to the U.S. over the past couple of months, over the past month or so. I think India was one of them. There were a couple of other Asian countries that were just reducing their tariffs, to the U.S. to not get hit with U.S. tariffs. So, like, I do understand the logic and the card being played. I understand the game theory behind it. I just don't know to what degree is he willing to push the envelope to keep that pressure on the board,
Now, I wanted to do one more tariff thing, and you may not have heard this, Tevis. So this was a headline late last week. Let's see. This was March 28th, actually. So actually not late last week. At the week, and it was either Thursday or Friday. There is a EU Parliament Trade Commissioner. Let's see. It's Bernd Lange, Brndlange, who basically said that if these tariffs land from the United States, then they could end up charging fees directly on U.S. companies as a punitive measure. And two companies were mentioned. Did you hear this at all, Kevin?
No. Can you repeat what he said? I was too busy spelling out his name.
Yeah, he said if the tariffs land from the United States, from President Trump, then the EU can turn around and charge American companies directly.
Yeah.
And did you remember the two companies that were specifically mentioned?
They were like tech companies, weren't they?
Well, okay. Since you don't remember, let's do this. Take a guess. And guys, if you did not see this in the comments, guess
it's gonna
two
be
companies.
Tesla. That's gonna be that's definitely gonna be one of them.
Okay, Tesla and
oh gosh. He said what exactly, Roy?
He said the EU could charge fees on U.S. companies directly to retaliate for tariffs.
To retaliate for tariffs.
And so two U.S.-based companies that are public were both mentioned. You said Tesla. We'll see if that's it. You guys guessed in the comments too.
Let me say Amazon. Or can I change my Tesla? Can I make it Meta?
Meta and Amazon.
Yeah. I feel like those are big ones in the EU.
So one was, instead, you were on the right track with one. It's Google was mentioned. That kind of makes sense. The only other one that was mentioned specifically was PayPal.
Oh.
Yeah.
Well, you got us there, EU. You got let's tone down the tariffs, everybody. We can't hurt PayPal over here. EU, they know where to squeeze, hey?
It seemed so bizarre, and I know that those are just held up as like potential examples, not exclusive or anything. But with PayPal itself, like that day, PayPal and Google fell about 5%, much more aggressively than the market. And as a PayPal investor, I'm like, dude, what are you doing? Like,
Roy's catching strays over here.
Yeah, it's like, what did PayPal do to you? I mean, like, come on. See, the nice thing about being invested in PayPal most of the time is, the flat pal meme that aside from actual earnings and results, usually PayPal is relatively flat. So when the market's cooking off and you see like HIM's down like 15% and Palantir down 8% and SoFi down 6%, PayPal's down like 0.5%. And here, like, this comes out of, I'm like, why is PayPal down 5%? Dude. Now, the crazy thing is this has never been done before. We don't have really any information at all. And the market is very much, I think because of the tariffs, was in a shoot first, ask questions later mood. And so just like, okay, fine. We'll just freaking sell off Google, sell off PayPal. Maybe we'll get back into it later.
Which play, right? Because you don't know how. It's a safe play because you're operating with very limited information. You don't know how far they're going to take it.
And the market does not like uncertainty. And of course, the funny thing is the market can also be very stupid because in no way, like looking at this, would somebody be like, oh, so those are the two companies and the only two companies from the United States that would be affected. So you look at all the other Magnificent Seven, you look at peers to PayPal as well, Visa, MasterCard, American Express, which do have some presence in the EU. It's not nearly as big as PayPal. They did fine. No big deal. And it's like, oh man, like headline risk is a real thing. So we don't know anything about it. We don't know how much, if it would be a direct charge, if that's even legal, if it would fly, would it be a certain fee? But it's a tough thing. And so there are no real safe stocks, safe companies, just because the reciprocal nature of some of these tariffs. You might say, okay, this company is well insulated, but then something crazy like this happens where we've seen Tesla singled out a couple of times, here PayPal and Google. It's not a pretty thing. So hopefully we get some resolution, we get some clarity, we get some certainty. Even if that's absolutely terrible news, the markets just absolutely tank and they go right to zero, which won't happen. At least we can, I think, start to rebound from there.
I think a lot of people, and I'm taking our politicians up here as a prime example, but like a lot of people associate Tesla as the first domino from a retaliatory tariff perspective because of the proximity that Elon has with Trump. And so that's the first order effect. It's like, oh yeah, Trump's gonna, like Elon's riding shotgun sort of. And so they're like, okay, how can we get to Trump? We're gonna go through Tesla. But I think where it really becomes damaging and escalatory, is that a word? Escalatory?
Yes.
Is big tech. Because big tech has been criticized for the last couple of decades in terms of how they collect taxes in the jurisdictions that they operate, right? Like you have Meta having in-app purchases in France, as well as the US, as well as China, as like maybe not China, as well as Japan, and like around the world is my point. And all of those jurisdictions have different tax implications, and Facebook, through tax loopholes and whatnot, like avoids it all. I think big tech, because of the wide reach that it has around the world, can be a really tricky scenario for tariffs because like a car, it's pretty straightforward to understand the tariff impacts. Like you look at the parts, you look at where those parts are manufactured, you look at the, where the end product is shipping from, and there you go. You basically have your tariffs. Big tech, it's a little bit more complex than that. And because it's so easy and accessible, there's low barriers to entry. Like that one is my fear. Like I hope the tariff conversations don't go to big tech, because if they do, not only do they put way more pressure on the market than like, like steel or whatever is being tariffed, but it also opens this entire line of debate around like tax jurisdictions and what big tech has to pay and how they're avoiding tax. And EU companies can be like, all right, well, you know what? If you're going to tariff us, then every single dollar that Meta takes in our European country, it's going to be tariffed. Like we can't collect tax on it, so we might as well tariff it. This might be like an incorrect line of thinking. I'm just thinking out loud here. but I can totally see the sort of cause and effect that would lead to an escalation in tariffs when you go into the software layer, because right now it's staying in the hardware space, right?
And let's go one step further, Tevis. Let's say that you're right, that tariffs land. Well, you're not saying tariffs land, but hypothetically, tariffs land. Then the EU then is charging, fining, whatever, large cap tech specifically. PayPal is included in that. Do you think that President Trump's just like, all right, cool?
He's the wild card in the deck, man. He's the joker in the deck. Like, you don't know when he's gonna pop up, like it's gonna change the game, you know? Like, it's unpredictable what he does because of, again, like, I guess to answer that question, the first thing, like prerequisite information that I need is, how is he viewing tariffs? Because if he's viewing them just as a card that he can play, as something to add extra pressure into getting, lawmakers and global leaders at the table, then that's one thing. But if he fundamentally, in his ethos, views them as like a birthright of the US, as we're better than every other country, therefore we shouldn't have to pay, like something so deeply embedded into his perception of the American way of life, then that's a much more pervasive problem, because he's never going to back down, because he truly believes that this is the way forward, and you have to go through a little bit of chop to get through onto the other side, right? And so if I knew the answer to that question of like how he in his heart of hearts sees tariffs as a tool, then you could get to the answer of like how he will respond, but we don't know right now.
So my main concern is he views them as reciprocal. And so based on how he governed over his first 4 years, if the EU levies charges, fines, whatever, against large cap tech in the United States, he will do the same. And so that would be things like Adyen. I mean, there's not like many amazing tech companies, to be honest, out of the EU anyway. But like if you hit them with direct fines, fees, charges, however you do that, whatever the legality of that is, it's really bad. Things get really ugly. Like Adyen is one of those where if you hit back, you're like, fine, if you're going to hit PayPal, we'll hit your Adyen and we'll charge them, or we'll charge a fee, fine, whatever. That raises the cost of business for almost everybody, because payment service processors, there's really three massive players in that environment. There's Stripe, which would be safe. They've not been mentioned. I mean, probably the EU would hit back on them too. There's PayPal's Braintree, and then there's Adyen. And it can get really bad for consumers, which I think are already under stress. So we need certainty. Hopefully we get it this week. I don't feel like that we will. It's just tough. Do you want to move on, or any last thoughts on tariffs? Macro?
No, we can move on.
Let's talk Nvidia right quick. Now, remind me, Tavis, do you own any Nvidia? All right, so we'll make this maybe a little bit quicker. You do own Amazon, though, right?
No.
Why do you hate good companies like Palantir, Amazon, Nvidia?
I used to own all three of those companies at one point or another. But Amazon, I sold, and Nvidia, I sold. Well, actually, I got my shares called away on both of them. So it's fine.
Yeah, thanks, Kelly. Yeah, I will get him. So a couple of headlines. Like it's the weirdest thing with Nvidia, because you see a lot of FUD. FUD is fear, uncertainty, and doubt. Doesn't mean it's fake news or anything of that sort. Even some recycled headlines from time to time. And so this last week, we saw two in particular. Amazon takes on Nvidia with discounted AI-powered Trainium servers. Amazon has been making these in-house, I think, to alleviate some of the dependency on H100s and Nvidia. I think that was certainly inevitable. They're still buying a ton of products from Nvidia and other companies too. They say that Trainium servers can run at 25% the cost of what Nvidia actually manages. And so they're offering discounts for those, I believe, that are using compute through AWS, if you're willing to use Trainium servers as just kind of a hook. And so, of course, Nvidia ended up kind of tanking off. And this was the original article. There's been a lot of, like, you can look on Yahoo and elsewhere. I read it, and now I'm blocked out. But Nvidia's China cells face threat from Beijing's environmental curbs. And so essentially, China has a environmental commission, and they have noted and they said, well, these data centers and specifically the H20s, they can't get H100s directly, supposedly, but the H20s that they're able to get, they're like, hey, they're not environmentally friendly. And so as a result, they're trying to, by a lot of different measures, shift as much usage as far as chips on China's manufacturers rather than Nvidia. So this seems like bad news. And is demand drying up for chips and chip manufacturers, that Nvidia's revenue is just going to kind of fall off of a cliff or stagnate in a couple of years?
How much is Nvidia doing via China sales?
That's really hard to tell.
Roughly.
But I will show you a headline that will hint at this. There is a thought that they're getting a lot of H100s through Singapore, and I think that there is certainly some measure of truth to that. But we see here, headline that also came out at the same time, March 28th, exclusive, China's H3C warns of Nvidia AI chip shortage amid surging demand. So the market chose to believe, because it's in a selling mood, the headlines that are like, hey, Nvidia demand is going to go away in China. There's a lot of competitors there. There's competition through Amazon. And so we see revenue declining or at least staying stagnant after a couple of years. That's not the case. And then do you remember seeing any thing in or on X or elsewhere that seemed to indicate that there is, even if it's temporary, a lot of chip demand?
Are you talking about all the anime thing that people are making?
Correct yet again. Can y'all please chill on generating images? This is insane. Our team needs to sleep. So
yeah,
I'm sure you guys clicked over and saw it, but let's see. Yeah, I mean, I love this. It's great.
Yeah, and now that says party zone. I love that.
Yeah. You couldn't see the full image, and I think it inferred from your title or your handle, "Fun of Investing." It's like, oh, this is a fun guy, chill guy, party guy.
They got the
party
vibe.
zone on the back. Yeah,
they got the vibe. Yeah, dude. I have the pro version of ChatGPT, and then I also have Grok, and both of them were bugging out on me today. I was trying to ask them stuff at work, and they were both throwing up errors for me. And I was just like, people need to get this stuff in order. So yeah, I'm not worried about Nvidia. At the same time, I entirely agree with this comment. The CCP saying they're concerned about the environment is nonsense. It is not their motive. We've seen this time and again for different issues. Yeah, I definitely think there's something here beneath the surface. Are H100s the best, like the top of the line product in the market right now across all brands?
I am not sure if that's still the case or not. I think so, but I know that Nvidia is working on other products as well. I would need to do some checking on that.
Yes, I agree with this comment as well. Go short on Adobe. What is Adobe even trading at right now? This can't be right. Adobe is $383. It's been going straight down in 2024, man. Holy. Adobe from $640 where it peaked.
Throw up the chart.
Yeah. This is the daily chart on Adobe here. It peaked at $640 here at the end of January, and at the end of last January, and right now it is currently down a ton, $348, down 40% over the past year. Wow.
And to be fair, like they've been implementing a lot of AI in their products as well, but it does seem that there's maybe they don't have nearly as much of a moat as people assumed, and that can happen when there's a major technological shift. So I'm not going to short Adobe, but yeah, it's probably justified. Honestly, maybe it's overdone. It wouldn't surprise me, especially in this environment.
Yeah, I mean, look, AI is only going to get better and better and better, and the pace at which it's doing so is staggering. Like, to the point where, do you remember that like Will Smith eating noodles AI generation thing? And it was
Yeah.
just like totally not great. And now you can have hyper realistic or anime or whatever other artistic style you want. And on top of that, you're going to have animation slowly down the line with Sora. You can have video. Um, it's just, dude, just looking at the trend and extrapolating out, distribution is the only competitive advantage in the future. Content is nothing anymore. It is not a differentiator. It is totally commercialized. Before, it used to be that you had master artists, master craftspeople. Content was king, and the differentiation of content was king. Today, and in the future, more so, distribution is the only value proposition, the only moat, the only competitive advantage, because everything from the content creation side is going to be commercialized. From marketing ads and campaigns down to the artistic, I want to create a character in a game type of thing, all the way down to animation and recreating entire movies in different artistic styles. I guarantee you, I will place a side bet with you, Roy. Within the next 3 months, somebody is going to come out with a full feature length film that is in the anime format. I saw the Lord of the Rings trailer. It took some guy 9 hours to make the Lord of the Rings trailer in anime. Somebody's going to do the full Lord of the Rings, maybe the full, like, extended edition, all the movies in anime. And I guarantee you that will be successful as hell. It will be the next thing. It'll be the next like Saratoga water that captures the zeitgeist of the internet that everybody is all standing around. You heard it here first. Under 3 months, it's going to happen.
Speaking of Saratoga water,
yeah,
you know where I'm going with this?
No, I do not.
All right. Let me pull this up here.
Somebody's going to clip this in 3 months, and I'm going to say I told you so.
It feels like it's just more a matter of when rather than if.
No, but the point is with the pace that I wouldn't be surprised if it's in 3 months, because it's going to get easier and easier and easier, and you have third-party applications popping up every single day. Dude, I saw with AI prompting, you had a video game company, which is like The Sims, pop up overnight, and they did $24 million in revenue over their first 2 days. Like insane numbers. And you're going to have one-person businesses that are skyrocketing in market valuation and that are efficient up to the gills because they have the most modern stack out there, the most lightweight architecture you can possibly have, all molded and tied together with AI as the connective tissue. Go ahead.
This is just Vlad's post, Vlad's team's post in this case, getting ready for Robinhood Presents the Lost City of Gold, and right there, the morning routine. Now, what was funny, see there's 3 right here?
Mm-hmm. Wow.
Yeah, they handed us, Saratogas when we came in. So we all got tried. Amit doesn't seem happy about it, but Tanner and I certainly were. And I do not like sparkling water. Usually I tried it. And I'm like, actually, it's pretty good. I'm not going to ask how expensive it is. It is not going to be something I wash my face with, but I love how these memes can just come very, very rapidly. So, but yeah, like you said, AI is not a meme. Compute is not a meme. H100s, Nvidia is not a meme. It's not a meme stock.
Yeah.
Here today was getting very close to $100, which is just shocking. And that's honestly like one of the questions was like, what are you guys still buying here? And it's for me, it's Nvidia. I've hit my 10% allocation or above on a lot of different names that are in my portfolio. Appreciate that, Elijah. My daughter actually picked that one out. She's like, you're going to the Lot City of Gold. You need to wear a gold jacket, gold tie, and cream color. So a little bit big for me. I need to get that taken in. But hey, like losing weight, it's awesome. But yeah, what's that?
Got to go to the gym. Got to fill it out.
No, got to go to Hims and really like lose that weight. Just kidding. One more topic from me, and then we can look at your topics.
Sure.
Is really I want to talk to you about this, and I'm very curious, actually, what you have to say, because I don't think we've talked about this before. This is Brad Gerstner in response to Jamie Dimon's comments. So first, his comments. We've gone from, I'm going back to like 20 years now, 8,000 public companies to 4,000. Now, some of that's, they went out of business. A lot of that has been consolidation as well, and also fewer IPOs. We're driving companies out of the public markets because of litigation, regulation, reporting requirements, cookie cutter expectations of how we want boards to be, excess regulations, shareholder meetings, which are frivolous. And then Brad Gerstner commented and said, as public markets got overregulated, private markets stepped up. Now a quasi-public late-stage market exists with massive liquidity and financing rounds that look like private IPOs, OpenAI, SpaceX, Databricks, etc. Great for late-stage firms, bad for retail investors. What's your take?
I disagree with Diamond, agree more with Gerstner, and here's why. Largest companies by market cap. So let me throw this up. This is a list of the largest companies by market cap. And okay, trillion, blah, blah, blah. We go down here. What's SpaceX now valued at? Like 250 billion, something like that? More?
It's a lot.
Billion? So my point is like, you have SpaceX, which is basically a top 50 company in the world as a private company, right? You have Stripe at like 100 something billion, 200 billion. You have OpenAI, who is over 100 billion now in market cap.
Right.
You have X, which is now the combined market cap after XAI bought it, is now over 100 billion as well. A company that's 2 years old, mind you. And so I think that it's not necessarily regulation that has pushed companies out of the markets. It's more so the consolidation, because there's so much excess liquidity of these investors who have made so much money in successful IPOs over the past decade or so, because they caught on the back of the internet, they caught on the back of cloud, they caught on the back of, app stores, mobile. And right now, you are getting a disparity because the little guy doesn't have a chance to compete anymore in these exciting stocks. Like I want to invest in, in XAI and buy a piece of Grok. I want to invest in Figure. I want to invest in a lot of these other companies, but I won't get a chance until they're super overvalued, which you could argue that they are right now. And that's going to be one of my takes for the next topic. But
yeah.
And the reason is because they have been blown up in terms of the liquidity, that they have no pressure to get to the public markets. Before, it used to be that the public markets were the liquidity event that companies are looking for to fund their next stage of growth, and they get advanced, increased scrutiny as a result of that. Whereas right now, me and a couple, billionaire buddies can get together and fund the startup and slap AI on it, and all of a sudden it has $100 billion market cap in 2 years. Like, excuse me, what is going on here? And so my point is, there's so much excess liquidity in private markets that is the first point of why we have fewer public companies, because they don't have any, they don't have a rope around their neck. Like, oh my gosh, we need liquidity right now, let's go to the public markets. They can do it in private with far less scrutiny. And then the second point is that consolidation point. Like, there's so many companies now that are being bought up before they get to the public markets. They're being bought up at $30 billion, at $50 billion, at $15 billion before they even get to that round. And so, I think late stage acquisitions are definitely increased. I mean, at least that's my perception. And that's also a reason why we, as public investors who are not accredited, who are not, multi-millionaires, I mean, I speak for myself, maybe you are, we don't have a chance to invest in a lot of these behind closed doors companies. And most of the juice has been squeezed out by the time these companies, if at all, they make it to the public markets.
Yeah, and I think Gerstner is right that it's, it can be good for companies, but it's really not good at all for retail investors, because we don't have that same access. Throw this up real quick, and This is annual IPOs. We do have 2025 listed there as well. And of course, keep in mind, we still have a long way yet to go. You can see in 2021, we had too many. A lot of these were, SPACs. Not every SPAC is bad. Of course, we own a SPAC, Sofi or X-SPAC in this case. But you can see that, of course, in the bear markets, it's no surprise that there's fewer IPOs. And even relative to history, it's significantly fewer IPOs, although we'll have to see how we do in 2025. Of course, a major one was last week. That was CoreWeave. But a lot of these are just not, they're relatively minor companies versus you have a lot of other mega companies that are private and seem like they flirted with being doing an IPO, but it seems like that they view being a public company as putting on handcuffs and making it so that they cannot be as agile as they would like to otherwise. So I don't think that's necessarily a great thing. Now, what I found really interesting with this, and I did see a comment, Elijah Cabler's comment from 840, if you throw that up. It's not just Robinhood that's involved in this, but I think that this is a piece of this. Vlad Tenev came on a fireside chat a couple of weeks ago now, and he had mentioned this drive towards tokenization of assets on blockchain. And one of those things he mentioned, and he's done this a couple of times, also had an article, I think in Forbes magazine it was, basically saying we need to figure out a way to give retail access to private companies. Now, they did do some of that with the IPO for CoreWeave, similar to the way that SoFi does with this type of assets through ARK funds as well. But it's not really en masse. And the concern a lot of people have had in the past is liquidity and lack of knowledge. But Vlad's point, and I think it was very astute, is we presently in the United States allow people to trade unlimited sums 24/7 on meme coins, and we don't allow access for the most part to private markets. That's antithetical to Robinhood's mission of democratizing finance. And frankly, I think that's just bad for retail. So Robinhood is certainly not going to be the only one that's involved in trying to expand that offering. And there's ways to do that. It'll take some time. But I think, Robinhood is a major disruptor in the space. So if they begin to go that direction, others will certainly follow, as we've seen time and time again. Do you think that's good for retail?
If it actually happens, then sure. But, it's going to, I think the barriers are in place, partially to benefit the people who are taking advantage of those barriers, but also partially because it's an absolute headache to cater to retail. Fractionalizing everything to the fact that, I can buy 0.5 shares of Figure. It's a freaking headache from a paperwork perspective, that those companies don't need the scrutiny. They don't need the headache. And if you do it all through funds, then you're going to give up a portion of the winnings or the proceeds. And I think some funds that I was looking at were 20 to 25% of the upside they take by just investing through them. But I understand why private companies don't do that, because if they were to go through the process earlier, then why would they invite that level of scrutiny if they don't really need to? So if the brokers take it on, then great. But I just don't think that there's too much upside for them to even take it on, from a dollars and cents perspective.
All right. Yeah. Hopefully we'll continue to see a healthier IPO market. But a lot of those companies that people would really, really want to invest in are just not going public right now. So do you want to talk Coastal Community Bank, or you had another topic as well, Tevis? It's your choice.
So we have three now topics. We had Coastal Community. So let me write this in the private chat. Coastal Community. We had X plus XAI. And the third topic, which I just saw, thank you, whoever commented in the chat, JMac. Have you seen this, Roy?
No, I was not going to look it up intentionally.
Don't look it up. We're going to react to it in real time. Get ready. Right. Get ready, everybody. Noto commented something. And all right. So yesterday, Noto said, I see and read every word, which was cool to see. Obviously, we want the leadership of our companies to be interacting. And he reacted to this post that said, "Sofi haters, the stock hasn't done anything lately, so it's a great time to sell and buy Hood now because they can deliver me cash to my door. Me and Sofi fam loving that it hasn't run up because we aren't done accumulating shares under 13. Noto interacts way more than y'all think, and if he doesn't, he definitely sees everything y'all post. More motivation for Sofi team, blah, blah, blah." The show goes on. I see it and read every word. And then 24 hours later, 1 hour ago, 48 minutes ago, literally, we were on this stream while he posted this. He posted.
Yeah.
All right, let's read this together, guys.
All right.
Noto says, "Rest assured, I see and read every word about our company, our team, and me. It takes great restraint not to reply and connect the massive disconnect by some between what is critical to do and when to do it." I mean, I'm sure he's talking about level 1 options here. Versus what is not critical to do. It also takes restraint to not react impulsively to defend my team from what I perceive as unfair and unjust treatment. So I think this is like his competitive side coming out a little bit. I am responsible for whatever does or doesn't happen, period. No excuses. And I love to see this, taking accountability. Don't get me wrong. I want everything done yesterday. And no one is pushing harder to move faster and faster and faster every second of every minute of every hour of every day with a founder's mentality than me. That's always been my approach. But doing everything is not realistic. And most of what people may think is important is miscalculated. Do I strike you as a person that knows what needs to be done and decides not to do it? Or perhaps what one thinks needs to be done is not the right priority? That's not to say we are moving at the pace we want. We never will. We make mistakes in execution that cause delays, so learning fast is critical. And we are not always as fast as we want on everything we do. But sometimes being fast out of the gate can cause one to be much slower later, which is the case in a couple of things. So cryptic there, but you think he's talking about Robinhood there, right?
I mean, to an extent, and also like alluding to being a baking license, like you're a lot heavier regulated than where Robinhood is. It's kind of like the public versus private. In this case, it feels like SoFi has the public handcuffs and Robinhood doesn't. That's not the case, but I'm just saying that's a metaphor.
Let's continue. This is great. So we'll make mistakes that cause delays, and we're not always as fast as we want to be, but sometimes being fast out of the gate can cause one to be much slower later, which is the case in a couple things, only to be able to move 5 times faster in the future. Speed matters, and we will fail without being fast. We will fail without being fast. What? But fast and wrong is also a failure. We will fail without being fast. Like if we're slow, we fail kind of thing.
Mm-hmm.
I feel like some comments are needed there. But anyways, but fast and wrong is also a failure. A sustainable competitive advantage is the critical success factor that all should be judged. And in this sector, sustainable competitive advantage is grossly misunderstood. And for that, I could not be more grateful. So he's saying, we benefit from you guys being idiots because there's alpha there. You can be sure I will not correct those incorrect points of view, and I would never mention other companies in any regard, saying, hey, I'm not going to respond to anything Vlad does because it's not who I am. We will just focus on our strategy, our priorities, and we will execute and deliver just like we have for the last 7 years. Is the world accelerating again? Yes, you bet it is, and we recognize that way before the last few months. So we are accelerating as well, referring to going back into growth mode, which they announced in the last earnings call. It was lonely being one of the few trying to change the world of finance through a challenging macro backdrop, regulatory winter, and the worst rate changes in our lifetime. But we uniquely delivered durable growth and constant innovation for 20 consecutive quarters. I welcome everyone to run faster, build better, and have a bigger impact because it will cause a swell as it has in the past, and the biggest and best benefit, the most especially those with the best strategy, the best execution, and the fastest builder of competitive, sustainable advantage, which is different than just making announcements or just shipping. I feel like this is a jab. We learned this in 2019 and fixed it in 2020. I couldn't be more confident in our strategy and the sustainable competitive advantage we have and others do not, and that we will continue to build the competitive sustainable advantage faster than anyone else. We know what needs to be done and are fully committed to doing it. Who dares wins. Fresh horses. Roy, thoughts?
Fresh horses we ride.
That was the biggest post I've ever seen Noto, like from a quantity perspective. I think in the last 4 years that I've been covering SoFi, that's the most that man has ever written in a tweet that I've personally seen.
Yes. And I think you can see a lot of emotion there too. A lot of pride, and these are qualities of a good leader, wanting to protect his team, wanting to execute, being hungry to, not really making excuses, but wanting to share the context. Love the post. And honestly, like this kind of rivalry, it's good. It's healthy. I honestly think Noto probably will hate this and disagree with this, but I think that this perceived rivalry, especially now that Robinhood has launched a banking product or is in the process of doing that this fall, will actually cause SoFi to accelerate. Like it's bullish for SoFi because they do overlap on a few products, right? But largely, they're really disrupting the old way of doing things more so than each other. And so with this perceived rivalry, with this, like people are like, oh, SoFi is sleepy, SoFi is slow, Noto's asleep at the wheel, which there's some truth to that. But it's overdone, I think. I really think that they'll rise to the occasion. Noto is a competitor. Like he's a born competitor. So I'm very hopeful that this lights a even further fire under himself and his team. It's kind of like when I know that you follow some sports, Tevis, but like for football, when your team is like somebody says some snide comments about your team, it's bulletin board material. You put it up there and you look at it and it gets you riled up and ready to go. That really can happen in business. And this kind of competition is great as long as it's not destructive. Destructive meaning you are launching products with the goal of destroying the other business rather than help grow yours own. They're not at that point yet. There are some public companies that are. Snowflake is one of those, by the way, and Databricks. But yeah, I love this. What do you think, Tevis?
Yeah, I mean, look, sorry, I'm just making a post around this, but basically in that post, I'm just saying that in the last SoFi Weekly and also in my video covering the Hood event, I talked about how the number one thing that I will be looking forward to with regards to SoFi in light of this Hood event is the way that they respond and the attitude that they take towards this. And I think this was a perfect post to summarize both of those things, because he was basically like, hey, we do hear you, we do see the value in our product, and game on. And we won't talk shit about you. We'll just let our execution do that for us.
So let's see it. That's the next thing, right?
This is probably true.
Honestly, he probably hates me, like, because I bring up I've dropped some topics intentionally because I have a little bit more insight on what's going on as far as like personnel stuff. So I've not mentioned certain names in a while, but the level one options, like I love that meme. I love it. Just like Tanner being late. I hope Tanner keeps being late because I love my memes. I love SoFi not having level one options and be able to say man on Mars first or level one options. It's great. And he is right. Like that's not a core product. That's not a critical product. They really need to fully integrate with Technisys, Galileo, and then chip products. Like at that point, like there's no further excuses. But he says that, the buck stops with him. I really do like Noto as a CEO. I've been frankly underwhelmed by the execution since I've been an investor, actually. Loan platform business is phenomenal. They've launched some other really good products too, but overall they've been a little bit disappointing, not just because of the stock price action, but I'm still an investor. I still see the long-term thesis. Really do respect Noto and what he has done in the past, and I look forward to what's happening in the future, even if he hates our guts, Tevis.
It's quite possible all the major CEOs hate my guts because I talk shit about all of them equally. And I think that's the freedom of having a platform like this, is like, again, I've mentioned this when SoFi was up, and I've also mentioned it when SoFi was down. Is if I don't have the freedom to hold the leadership teams of the stocks that I'm holding responsible and treat everybody equally with the critical lens, then I am not doing my responsibility as a diligent investor. Right. And I think that's the most clear that I can possibly summarize it is I know a lot of people jump to conclusions around like, Noto posted this and then I retweeted it saying, oh, super bullish post, whatever. And people are going to be like, oh, yeah, like, you simp and you fanboy and whatever. And then the next thing is going to come out and I'm going to be like, oh, well, SoFi should have been faster on this. And they'll be like, oh, you sell out. It's like, guys, I'm doing 2 millimeter shifts from like, hey, if it's a scale, and I think I've talked about this concept before, right? Like if it's a scale and bearish is on one side and bullish is on the other side, and it goes from 0 to 100, I might be at like a 90 for SoFi, right? 90% fanboy, 10% critical. And if something happens with Hood, or if something happens with SoFi that they don't ship something, it goes from 90 to like 88 to 87. And then it goes back to 89, 90, 91. And like that 5 percentage point swing is where my sentiment swings. And the reason why it swings that small is because I have built up this conviction over the last 4 or 5 years. But the perception of people seeing my posts online is that the swings are like 50% back and forth. Like I'm going from 90 to 30 to back to 100 to back to 0. And that's just not the case. I think that, obviously when you make content, you want to make it also entertaining, and the debates and the discussions are very entertaining. But at the same time, like I think that it's good to, and I think you said this last time, it's just good to not have an echo chamber of like all of us patting each other on the back as we slowly descend into a company that is no longer a, strong growth story. I think if we constantly check it and to say, hey, wait a minute, are we still on track? Are we not on track anymore? What's going on? Then we're going to be better off, not only as investors, but also as content creators, because you can just make a more dynamic show. And if people want to hate along the way, then fuck them.
So it's time to run an ad. We're over an hour. Now that you've demonetized us. No.
Yeah.
Old rules.
Yeah. Here's an ad.
So Tevis, your choice. Let's shift topics. We'll save maybe more of that for SoFi Weekly too. We do want to get into your comments here before I need to pivot and go to Robinhood Weekly. Maybe you wanted to pick one of those two topics that you mentioned, either CCB or the Doge. XAI.
I think we can skim over the XAI stuff.
All right, let's do that, and then we'll touch comments maybe the last 15 minutes. So
sure,
maybe 8 minutes on this.
Yeah, so let's spend like 5 minutes on the XAI stuff, and then maybe 5 minutes on CCB, and then we'll do comments for like 15. How about that?
Okay.
So I posted about this XAI thing, and let me see if I can find it. So basically, what happened over the weekend was Elon announced that XAI was buying X. And if that's confusing to you, it's because it's meant to be, because they're named the same freaking thing. His AI company, which has Grok, is buying Twitter, basically. And the reason why that was interesting, I can't find my post on it now, but the reason why this was interesting was because of the valuation that they were buying them at. So essentially, why can't I find this? I don't know. Did I share this with you?
You did.
Yeah. So I believe, I'm just going off memory right now, they were buying them for 45 billion, I think was the number. And basically what Elon bought X at. So there was no like devaluation there, I believe. Here it is. Oh, it's because it's a reply. Okay, so let me throw this up. I know I'm eating into the 5 minutes here. I did a little Elon thing. So he posted on March 28th saying XAI has acquired X in an all-stock transaction. The combination values XAI at $80 billion and X at $33 billion. So $45 billion less $12 billion in debt. So I was wrong. They counted for the debt. Blah, blah, blah. X is a digital town square, more than 600 million active users. XAI is building Grok and their data centers, and now they're merging them together. Fantastic. I posted around this saying, okay, so basically how I'm reading this is Elon is using his AI company's massive $80 billion valuation to absorb Twitter's debt, cutting down his own risk while tapping Twitter's data to supercharge XAI's models in training. And I said, look, this must be good for Tesla investors because XAI is flush with their massive valuation. And under this structure, Twitter won't need any more capital injections from Elon. Because if you remember, back when Elon bought Twitter, he had to sell a bunch of Tesla stock to be able to do that. And so I think this is Elon taking some of his chips off the table from a dollars and cents perspective. Am I understanding this correctly? Is that also how you're seeing it?
I'm not sure. I've not put enough thought in that. The only thing that I'm sure on is it seems like a natural fit just because with an LLM, you need to have a platform to train. And so likely either that was happening because Elon owns Twitter, he just like, oh, help yourself. Or they were basically paying, XAI was paying Twitter some revenue for that, which feels like taking money out of your left pocket and putting it in your right. So I think that this is a really natural fit. Plus, Grok is, as it continues to get built out, a natural fit for a lot of its enterprises, actually, but especially Tesla. I'm really looking forward to not having unhinged Grok, but regular, sane Grok in power, like some of those things within the Tesla vehicle, adjusting climate, mirrors, opening glove box, navigating. Like it's okay text-to-speech technology, but it's not great. And there's a lot more they can do with LLMs. And honestly, LLMs are a commodity, but if you're able to deploy them at scale in a meaningful way, I think Tesla has that advantage. I think Google has that advantage as well. That could be a really, really good thing for the bottom line. So
it is definitely, moving money from one pocket to another because it was an all stock deal. I don't know if he had any type of liquidity event there where, I guess now he just has more XAI stock. I think also, I don't know if this is the case, but I would imagine that it also helps him with mind share a little bit in terms of like not pivoting back and forth a million times. Like now that they're under one corporate structure, that he can just be like, all right, well, I think about Grok and I think about X in basically the same umbrella in the compartments of my brain, as opposed to different companies that he needs to. Because if Tesla bought Neuralink for whatever reason, I think Neuralink would get a little bit more love. But because it's a standalone company, Neuralink is like the adopted stepchild of the Elon companies. That's a horrible expression, but yeah. So and then the other question, and maybe I'll ask you this, and then we can move to our next topic. But the other question I had, and I'd love to hear your answer, is: do we think the next move here is Tesla buys XAI? Or do you think it's like way too overvalued that Tesla could possibly ever buy it?
honestly, I think it should have always been part of Tesla. But no, I think I'd be fine with it as an investor. It wouldn't shock me if that actually happens. Although it would be a little bit weird to have Twitter, or X in this case, as part of Tesla. Like that's not as much of a natural fit as Grok is necessarily. But I mean, it'd be fine. It'd be weird, like just to see the Tesla integration of like, hey, you can access all your tweets and we can read them off live and everything while you drive. And not anything else. That's the only true social media. So I would be okay with it just because I do think that there's some really good technology there with XAI. Like Twitter itself,
Yeah. I mean, look, it's going to be a massive pool of data to train the models. So at the very, very least, I can absolutely see a partnership, a deep partnership between XAI and Tesla, where they basically have Grok as the brain for Optimus, and they have Grok in all the cars in a more embedded way. And there's some revenue share or something around there. But I don't know, man, because like keep in mind that X is now going in the payments route. Did you see this? And I don't know if we're going to fall into a rabbit hole here, but there was people found stuff this weekend on the source code for X saying that they're releasing a debit card, like a physical payments card. And we know that X payments has been approved in a lot of states, and I think we're tracking for end of year 2025 or maybe sometime mid 2026, where they're just going to have, basically they're becoming a payments provider. And so you have to think of it from that context as well as like, okay, well, if X is now taking payments and they have XAI, like if it's under one umbrella, like how does that change the paradigm, if at all?
Yeah, it doesn't for me. I've talked about it elsewhere, but the West does not want to integrate its social media with its payment, like WeChat Pay in China. The other issue is for payments, trust is the biggest factor. It absolutely is. And that's one of the reasons why Sofi and Robinhood and so forth get a lot of brand recognition out there, just because, if you have never heard of a company, you're probably not going to trust them. Versus if you're like, oh yeah, they're everywhere. That doesn't make it trustworthy, but your natural human impulse is to give it a little bit more credibility. Right now, there's a lot of brand damage. We've talked about it before with Tesla and Elon Musk. How much more so is there? And I know that there's X fanboys and Elon Musk fanboys that will absolutely eat up anything he puts out. That's fine. He does put out some good products. This will not be a widespread thing at all. It's very niche at best. So I don't find it compelling at all.
Nah. All right, let's move on to the next topic.
So let's save the Coastal Community Bank, I think, because I'd prefer to do a full treatment on that. Sure. But you guys check out Tevis's post from last week. It's very insightful. There are stocks and tickers that the market, not the market necessarily, but people ignore. It doesn't mean you can't make money on them. Like that was one of those classic examples. I thought of it briefly, and I'm like, I'd rather be in Sofi. We'll save that one though. Real quick, let's throw this up, and then let's take some comments as well. I saw this in the comments when we were talking about the IPO segment. They said, hey, there's this disparity between the CoreWeave, Reception, and Newsmax, which IPO today. And you can see it started at $10, and it's run up in after hours to $97.80. So that is a 978 times or 978% gain in one day as an IPO. So congratulations if anyone traded that, made some money on it. Jeez. That is rare. I don't know. I know what Newsmax does. I don't know why it was received like that, especially in a day like this today. There's probably some good reasons, but case in point, like the market was kind of sleeping on that IPO. It was all about CoreWeave. You can act if you take time and you understand an industry, you understand a company, and you're like, hey, there's premium here. The market's sleeping on that. There's absolute alpha there. So case in point, you'd be up almost 1,000% in the day if you bought, right as it opened up.
Yeah. That's that makes me feel depressed. Somebody can just casually catch 10Xs overnight. But congrats to whoever did it. That's amazing. That's fantastic.
Yeah.
Okay. What is next? I know you have to go soon. Shall we? Comments. All right. And if you guys have questions, throw them in the chat.
And while you're looking for a couple of comments, I'm going to run one more ad, guys. Thank you for being patient.
Greedy. 2 ads.
Two ads in an hour and a half. I don't think it's too bad. So, hey, the bags are not going to buy themselves.
That is true. It is a red day. Ads don't cost you anything. Here's your second ad, guys.
Yeah.
Okay.
Yeah, I am curious. Style said it. Did anyone in the chat buy this IPO? Let us know. Throw that back up.
Yeah. Let us know. Greedy man.
That's right.
Good thing I'm on YouTube Premium. Yes, YouTube Premium is the way to go. And I hear if you donate, there's also no ads. Roy, tariffs on PayPal. Are you concerned?
I don't think those actually happen. We talked about, what they were earlier in that segment with tariffs. It would be relatively unprecedented. It would kick off a nasty, nasty trade war, in which case I'd be more concerned by the broader markets than PayPal themselves.
And then split those. Like, so in a tariff environment, are you concerned about PayPal?
Usually I would say not really, just because people are still going to buy things, and it's not just like a US company and people are using that only for overseas cross-border exchange. They can offset some of that too, simply by shifting a lot of it onto PayUSD, which it seems like it's something that's coming based on comments by Alex Chris in that conversation as well, in the interview. So I wouldn't be too concerned unless like the trade war like really accelerates and it gets nasty both ways and it just absolutely destructs globalism. That would be really bad, kicking off like a major depression and recession. That would be really bad. I don't think we're nearly at that point enough to really even consider it. So PayPal should, in most environments, be more insulated from inflation and also tariffs.
Yep. What are you guys buying at current price? I'm not buying anything because I need to find the time and I need to find the money, but basically throw a dart at a dartboard and you'd probably be well off here, except Adobe. Don't buy Adobe, but you can buy Amazon, you can buy Nvidia, everything else that we pretty much talked about, Roy.
And don't buy Joby.
Yeah.
Yeah, I'm like a little over 2% cash. So honestly, I'm being very careful with remaining buys. I do have some cash, but it's a trickle compared to the cash that I held before coming into the market. So Nvidia basically is it.
Good old Jobs. Good old Jobs. Tanner, I know you're watching. All right. Nvidia it is. Definitely buy Nvidia. I wouldn't be opposed to that. Wouldn't be opposed to some Sofi at $11 either. There's a lot of things. Just throw a dart at a dartboard, honestly. If the company's growing, if they have no debt, if they have good growth rates like HIMS does, and it's under $30, you put all your money in that, not financial advice. Okay. As the spokesperson for Canada, what are your thoughts on Trump's first few episodes of his second season reality show? Yeah, look, I mean, I think we're going to have to wait to see how it pans out. I feel like it's going to be an interesting time in Canada because of the elections that we have in the next 30 days or so. So that is really going to determine the direction that, I mean, I kind of answered this one as well. Like, I feel like Canada, from a GDP perspective, has had a lost decade, and I don't think that's biased. I mean, just look at the metrics. We've had like 1.6% GDP growth in the last 10 years, literally. So, I think we are in a very precarious position. Trump is just an external factor that's flaring up internal problems that have been problems for the last several years. And it's really going to depend on what the election results is. I think both candidates have different platforms. Both candidates have different ways of dealing with international relations. And so it's tough for me to say. Ask me in a month. How about that? Ask me in a month when we have a final decision, and I'll give you an answer of what I think. Age-old question: Google or Nvidia?
Nvidia. Google's not bad, but Nvidia.
I would say Nvidia as well. Would you plan to move somewhere other than Canada in the future? Absolutely. I'm originally, born and raised in Europe. I love the European lifestyle, so I would definitely move there. If they actually made some freaking money and cared about work a little bit more, but chilling all day long and having little espressos at 2 p.m. is also a great lifestyle. So, yeah, Kelly, I definitely would. Poland, I hear really great things. Really, really great things. Okay. Is there a potential proposal in Canada for no capital gains tax on Canadian investments? Yes, Julia Roberts. I love your movies, by the way. Yes, there is. So one of the candidates here brought up this proposal a couple of days ago where they were basically saying it's not no capital gains tax, is that you fully defer your capital gains tax if you reinvest in Canadian markets. So I think it's most relevant for real estate, and it would sort of operate like what is it, like a 1081B or whatever it's called, the provision where, like, if you sell a house to buy another house, you don't get capital gains on that house. So it would be similar in that idea where I can buy a house here and I automatically have 25% in the bag because I'm not going to be charged tax on any of the capital gains. And then I can just keep on buying, more properties in Canada because I'm investing in the domestic economy. That would obviously, want to be incentivized. At 1031 exchange is what I'm thinking. Thank you. But yeah, it is one of the policies that came out from the Conservative candidate. So we'll see if that ends up being implemented, if that candidate does win. Okay, let's see. Roy, anything that's catching your eye?
JS24's 9:14 p.m. comment: would healthcare do well in a recessionary environment? It can. It's been a while since we've actually had a real recession. It depends what kind of recession. Ultimately, like if it's a deep, dark recession, nothing does great. But it would tend to outperform energy as well. Lipstick stocks can do well too. It just depends what type of recession it is, how deep. Honestly, I just prefer, rather than rotate, to double down on some of those companies where long term over the next 10 years I think will do well. Even if they're very cyclical, like Robinhood would get hurt pretty badly in a recession. I'll be glad to keep allocating. Yeah,
there you go.
Austin Harrison's. Oh, go ahead.
Don't need to marry a Canadian to buy property. You do not. You do not, Bookers. So you just need a lot of money.
Austin's comment at 9:15. Thoughts on cybersecurity, Palo Alto, CrowdStrike, Fortinet, and some others as well. Zscaler. There's Century One, Rubrik. Yeah, it's an interesting industry and space. My issue with that, Austin, is it's hard for me because that's not the niche that I'm in. I have a brother that's tangential to that. I can lean on him some, but it's really tough for me to determine like how effective, how good their mode actually is. Like CrowdStrike does seem to be best in class, but that's a guess, and it's valued like that. And I don't really know how to. I see the industry and space going up well. That's one that if I wanted to invest in personally, I would try to find an ETF that incorporates a lot of those, because it's not just a winner take all or even a winner take most. It's one of those areas where you can see that the TAM continues to accelerate, the need for these accelerate. And of those companies that you mentioned, probably 3 of them are going to be like really, really significant over the next 10 years.
Yes. It is now 9:23 in the PM, and Roy has to go in 7 minutes to Robinhood Weekly. So naturally, we're going to do the last question. B-dubs, this is a bannable offense, all right? If you talk about mint chocolate chip ice cream, you will get kicked from this channel, all right? That stuff is gross. We don't talk about it. All right. Pawzilla is asking, I'm getting a lump sum of $300K for selling my business. Congratulations. What would you guys do with the capital? Roy, do you want to go first?
I'd just say we don't know your situation. We don't know if this is money that you need or not. We don't know what your income is, your risk levels, your horizon. I would recommend, like, if you're not sure, be very slow and cautious with it. You don't need to deploy it all at once. Do whatever helps you sleep at night and whatever your goals are. If it's income, you can allocate along those lines. If it's real estate, whatever it is, but pick something that you're comfortable with as far as risk tolerance. There's a lot of tools out there. Robinhood has announced one, for instance, but it's not just Robinhood. There's a lot of companies out there that have tools to kind of help you like target the right area. And with that large of a sum, like, I wouldn't YOLO it all on like the next IPO or 0DTE calls. Unless it's his pocket change. Like, if you're fabulously wealthy and it's pocket change, you do you. Yeah, diversify some. I'd concentrate on what's your core conviction around what helps you sleep at night. So whatever that is.
That's a great and measured answer. My answer is kind of similar. The over on Duke is probably your best bet for that 300K.
On Robinhood, right? If you're able to access it.
Obviously, I'm kidding. Please don't sue me, bro. I'm not a financial advisor. This is just for entertainment purposes. I feel like I have to say that flat out for this episode specifically. Yeah, no chocolate chip, no mint chocolate chip on this. Anyways, thank you all so much for being here. Really appreciate it. Please go and support our boy Roy on the Robinhood Weekly, which is starting in 5 minutes on Roy's channel. And as for the Bootleg Weekly, we will see you next week at 8 p.m. Eastern on both Roy's and my channel. Thanks so much. See you next time.
Appreciate you guys.